day all. Ira Epstein of Linn and Associates, and it is Thursday, the 26th of March, 2020, and I'm back. It's getting on to 5:30 p.m. Daylight savings time, and I'm sorry that I had to be gone, but it's the way it is. When you build out a whole new studio, and that's what we did from scratch, basically, and we got it done in about 3 business nights. That's a lot to accomplish. If you know anything about how this is all done, I think you'd appreciate it. So in looking at the market, we've had a huge 3-day rally in the stock market. We've had a pretty wild metal market, and we'll get back to that in a moment since this is the metal update. But remember, we have a relief package that is being passed in the Senate, already done. Now it goes to the House, should be fait accompli tomorrow, unless somebody decides to hold it up. We know who that somebody might be. If they hold it up, we'll see if that goes the case or not. If so, then you all still suffer until something can get done. The president's certainly trying to do it, and he's given up an awful lot, if you think of it in political prowess, to get this to the point where it should be. It's a relief package, not a stimulus package. It's meant to get the American public, those out of work, those that make under a big threshold of near $200,000, money in their pocket to survive for 3 to 4 months. That is a good thing. Do I think we'll be out of work that long? No. So the package may not have to go that long. We'll let it play out. At the end of the day, where's all these trillions going to come from? And that's the relief package. I think there's a stimulus, a QE package right behind it. And if you saw today, Fed Chair Powell on an interview, I think it was NBC, he's basically agreeing with me. That is what's going to be the case. The Fed is there for the markets back. On the gold chart, you had almost a $200 break, $190, and you've recovered about 80% of it. Pretty strong move. When you look at these swings, if you could catch them, God bless you. But I think this just caught people that way and the other way, and a lot of it probably had to do with the fact that gold held up to a degree, and as the stock market cratered, and that's the right word, people started selling assets all around, trying to get money in hand to hold on to things maybe they shouldn't have. It doesn't matter to me. That's what I think occurred. Then when we look at the swing lines, you do have a pattern, finally, of higher lows and higher highs. Now, the reason this looks so strange is in order to show it on the chart, the way the scale would go, it wouldn't work very well. When I start putting the moving averages on, the scale changes, and you can see we had a successful, past tense, successful test of the 200-day moving average of closes. The market also made in the process higher lows, and it finally got over the 18-day average of closes, what we call 18-day MAC, so the bias turned up. Where's the resistance? Upper Bollinger Band, which it never got to. So we have a market here that if it pulls back to the 18-day average at 1596.80, be careful, because you will lose the uptrend that you have. It's a number you don't want to see hit. So the bulls have to defend that not occurring, otherwise you probably enter a period of churn. What I'd expect is on the next decline, if you get one, that we're looking at support between the 100 and the 18-day average. If the market can clear this 1698, it's liable to just move right on up to that upper Bollinger Band over the 1740 level. When we come to momentum, you're overbought. So we have a market that turned the trend, held the 200-day average, didn't even pay attention to the 100-day on the way up or the 18, just soared, and that's why these are so hard to catch. You literally had to be a buyer under the 18-day average with the downside bias. It's not something I'd advise. It's almost like you had to sell it up here, picking a top to catch that downtrend. These are not easy trading vehicles at that point. In the gold-silver ratio, did it peak out at 125? Now that'd be how many ounces of silver you need to get 1 ounce of gold. We're back to 113, so we've had about an 8% or so correction, but it's still not in a trend favoring the silver market. And in silver, you can see that you have a pattern of a lower low, higher high. The line in the sand, as I like to call it, it's the 18-day average. All you did is rally up to it and you went, oh, I've exhausted myself. Because you went from 1160 to 1480 roughly. I mean, that's one heck of a rally. And again, I wouldn't know how to catch a rally like that. These are just emotional moves. In the copper market, the big question as I see it is, has the market bottomed under the $2 level? Don't know. What I can tell you that I do know is the swing line has a pattern of higher lows and a higher high, but it's really not doing much more than that. I've got a button that came up behind me, so I'm not going to be able to go any further in the metals. I wanted to be able to get to the platinum and palladium, but got a problem right there. In any case, I want you to remember that we put out a lot of information just like this for you with our daily writings. And as I said, we have little bugs that we're going to have right now in our new studio, but I expect that. It's a one-man studio when I do this late at night. Normally my staff's here and they can help me. We cover all the metals, and we'll tell you what we see going on, where we see it going on, why we're seeing certain things take place. And the idea there is to help you with your trade recommendations, be it futures markets, be it spreads, be it the options markets. We cover all these different arenas. So how do you get this information? It's simple. Our website is up. Go to www.iraepstein.com. On the bottom right corner, you will see the word free offerings. Click on it. If you're watching me on YouTube, you can generally click up it when you see this arrow, and that'll take you there. Sorry about this little glitch, but you know I'm back. We'll get those worked out. I'm Ira Epstein.